welcome everybody. Thanks for joining us on this weekend review for Maxi. I'm Max, and I'm joined by Sid. We're going to be taking a look this week at how our predictions have fared. Then we're also going to take a look at just the market this week, and we're going to take a look and make some new predictions for the coming week to see how we expect the market to continue to develop. So let's dive right into that. This week, or I guess on the 24th of this week, we posted some technical analysis about Bitcoin in our Discord channel. I'm going to take a quick screen share here and share that. And so we had noted here that the Bitcoin was retesting an old kind of like support range, and it needs to close above this range to continue the uptrend that we've been seeing, this kind of rally that Bitcoin has been making since it, kind of had bottomed around 15,000 and has pushed back into the 30,000 range in the last couple months. We wanted to see this purple range hold as support, or turn into support rather than act as resistance. We have not really seen that play out this week, and so we were expecting Bitcoin to continue to potentially move down and retest the previous support range marked out down here in teal. And that is most likely going to be in line with what we were expecting for the equities market too. The equities market, however, had some pretty major news and developments this past week. So we got our FOMC meeting, which is where the Federal Reserve announced their plans to adjust the federal interest rate, and they've announced a 0.25% interest rate increase on a federal level. We also got earnings reports from some pretty major players, namely Apple, who outperformed expectations pretty aggressively. And since Apple comprises a very large portion of the NASDAQ, that positive news has kind of pushed up the market, while the general market trend that shows a bearish sentiment has kind of taken a back seat to that news, causing more chop. We were really hoping to see a more clear direction to be chose this week, and we kind of didn't. So we're going to have to take a look and see how to continue trading this chop. Sid, do you want to share your screen? And
yeah,
let's take a look at how this
so in terms of the actual markets, I'm gonna we're gonna look at how the SPY and the QQQ closed, and we had also shared this on Discord right here. I'm just gonna scroll here.
There it is. Yep.
With this TA post, and we did see that basically we've just been chopping, right?
Yeah.
For the SPY and QQQ for months. And that is key resistance that we marked out, and we've still like closed right on it or under it.
It's just not giving us the clarity we want.
Right. Yeah. And so I think it's an important week. The next week might be an important week. Oh, also, I think the next CPI report and the PPI reports are due next week.
Oh, nice. Those are the reports that show what the consumer inflation rates are. So it's basically the information that the Federal Reserve acts on when they make their FOMC decisions.
Right. So, like, I think the market is going to look at what the numbers are and then react accordingly. And so, I think we are at a point where we could see it break out. This is, for those who don't know, like we've, at Maxi, we have our own indicator. It's called the Maxi Trading Buddy. And so what it does is it prints bear prints, like it tells you when the trend changes. Like we get a bear print, and then if we also have something called a strength band, and when we see the bands flip color, and if the color matches the print, then we can see a confirmation of a trend change. Like this is the SPY. You can see how it's kind of called the bottoms and tops. But yeah, for this week or last week, we just got a bull signal with a green band.
That's a big deal on the SPY on the weekly chart. Like if you zoom out on that chart, you don't get faked out often with a bull print on the weekly. Like
exactly. So like
it's a very bullish indicator.
Yeah. So this could mean that like markets this could be at least a temporary bottom uh, for markets if we do break out resistance
Yeah. What that
and
means is
we
if we're
sustain.
closing, if we're going to be breaking above that yellow line that you've marked out, I am very interested in going long equities,
Yeah,
purchasing equities and pretty aggressively, more so than I have in the past 5-6 months. This
right.
is it's a very
You know, we've
big
just
shift in the trend.
since June last year,
Yeah.
you know, when pretty much the chop has been, just been chopping from then. And but the starch RSI, which is the other indicator I kind of use, it does seem that we might be a little overbought. So
Yeah.
I think next week or the next few weeks will be important
Yeah, I
to
agree.
see
Especially
what
looking at the
direction.
Stotch at the QQQ there on the right. So, Investica QQQ index, that's the NASDAQ.
Yep.
In case people are unfamiliar. And so you can also see, like, yeah, we're similarly reaching that very important resistance level. If we can flip that into support, if we start closing full weeks above that point,
Hmm.
fantastic time to buy into equities. But you can
Yep.
also see down below the chart there is the SRSI, the Stoch RSI, and it's
Yep.
when it's above that blue
Yeah.
zone there, you can consider the asset that it's tracking to be overbought. So we are on the overbought end of that spectrum as well. So
Exactly.
not closing above the resistance, not getting the we're not
It's
like
teasing us.
yeah, it's not
What a
clear,
tease, you
and
know.
it's definitely like it's in that place where it could push above and become very bullish for the coming months, or it could
Hmm.
fail to make that close and keep pushing down. So
Right.
absolutely kind of like a shitty thing to say, I guess, as like what's the prediction here, it could go up or down. So what we're doing, we're definitely keeping a
Right.
close eye this coming weeks. These are going to be important closes to see how this resistance or support what it becomes, and if it flips, it's definitely the indicator that it's time to act on equities.
Right. And I think also last week, what really like, we were way down. It
Yeah,
was about to close, uh, you know, bearish, like very clearly.
yeah,
And we had Apple earnings, right?
yes,
Like that was on Friday, I believe.
yes, it was.
And or like I think it was Thursday after market. So Friday, what happened was that basically, so a lot of the SPY and the QQQ, just the way the index is, majority of it, like Apple, uh, consists of most of the SPY and QQQ. So if
Yeah,
so the Apple can move, you know,
yeah.
basically the whole market.
Yeah, so those individual shares for Apple, because of its market value, so its market cap is such a large portion of these indexes. When Apple has a good day, the index has a good day. And it doesn't
Right.
necessarily mean the entire market is having a good day. And that's what's making us feel a little uneasy about, this. It's definitely starting to look very bullish on the chart, but we are aware that that bullish sentiment is heavily skewed by a positive earnings call from Apple, especially since that happened on Friday.
Exactly. So like you can see, like it basically, you see this wick, it
Yeah,
got bought up,
yeah,
and that's just because of Apple. But we still did close right at resistance.
yeah,
So that's why
right at
it's kind
resistance.
of unclear. So we'll have to see. How did Apple do? Like what are the numbers? Like
Yeah, let me share the. I'll share my screen here, and
yeah.
let's take a look at Apple's earnings right now. So Apple has just crushed it completely. So
They
here I
they
have.
also announced huge stock buybacks, right?
Yeah,
Like which
they
also helps. Yeah.
announcing a buyback, and here's the actual numbers. So you got the weekly share versus the like expectation versus reality here. So reality on the right, expectation on the left, and you can see across the board the reality has beat the expectation. The big ones
Hmm.
to look at are the gross margins. So the expectation for the margins were 44.1%. We beat that 0.2%, and it doesn't sound like a lot, but that's quite a bit. Like,
Yeah. When we're
and
talking billions, yeah.
yeah, and then
But
so you also see like the revenue for like iPhone sales way up. That is a big deal.
right.
And that mixed with the news of them doing buybacks for the stocks. Buybacks for the stocks is literally just, pumping money into the market cap. You're using
Would you say that's every time that's just bullish?
uh, there's very
If
few
a
scenarios where
company
company buybacks
like
are bearish. Yeah, I think so. When a company has money, there is basically two options, right? You take the money and you pay it to the people who own the company. So you do a dividend, or you
okay,
take the money and you buy back the shares of the company to bring up the value. Either way, shareholders win. So when there's a positive cash flow, like there's clearly from this earnings call, that's definitely bullish news. So I think a lot of people, especially lately, have been weary of tech companies because a lot of people consider the tech sector to be quite overvalued, and it's a fair assessment. Like tech is oftentimes valued based on its future prospect, not based on its current value.
right,
So
right, right.
so I understand why people feel that way, but we're talking about Apple. Apple isn't.
Right.
It's not a startup. They're not trying
Um,
to build something
Blue
innovative.
chip. I mean,
They
it's the
have.
biggest blue chip.
Yeah,
Right.
yeah. So it's like while companies like Uber and Tesla and stuff are absolutely much more speculatively valued, Apple is Apple is a successful version of what it's valued at what
Right.
it's worth. I mean, look, you're pulling $51.3 billion in revenue simply from phone sales. That's
That's pretty good.
yeah, that's quite good. So that's absolutely why we're seeing this chop and this uncertainty. Like Sid was saying, the market was much more bearish before Apple's earnings call came in. So like we were getting a much more bearish close on the weekly chart, and once that Apple earnings came in, it really kind of
Yeah,
threw a wrench
Friday, the
into it
last day of the week.
right
It
before the
just
market
like
closed.
sort of like week back up.
Yeah, and
And
that's
and
it's tricky.
yeah, and also in terms of like buybacks, you were saying like so. I mean, my like during say like COVID times, right? Like
Yeah,
we had a lot of stimulus
a lot of
and a lot of money being pumped into the market,
yeah, and
and
a lot of that
and
was used to buy back shares. A lot of the
exactly
companies
that's
used
what
yeah,
I was sort of coming to, and like people back then they were like, okay, you would see all these like basically stock market go up, right?
yeah,
The whole like meme of it, like
yeah.
it always goes up,
Stocks never drop.
and people would ask me or ask us like, okay, why? I mean, it's not like suddenly all those companies started making insane profits. No,
No.
but why did they, just, why did stocks just keep going up all the way for like what? How many years? 2 years, maybe
Yeah,
whatever,
straight
till
without even a blip. Even
without a blip,
even
and
COVID-19 was barely a blip on that climb. Honestly,
exactly.
yeah, ridiculous.
And would you say that that's because of like share buybacks mostly
100%. It's
of
share
like
buybacks, and a lot of it has to do with the like Federal Reserve pumping money
right?
directly into treasuries of private businesses. Like
I see.
yeah,
So it's a combination of the Fed and the fact that companies would basically, since the rates to borrow was so cheap,
yeah,
they would basically borrow money
yep.
and then basically buy back their own shares.
Yeah, and so now when you see the
So it's a
FOMC
bubble,
meeting,
then. Yeah,
yeah, and now when you see the
basically.
FOMC increasing the interest rates to I think over 6% now, that same money that you would have borrowed to pump up your share price is now much more expensive to borrow, and the game is changing. So that changing in the game is a bearish shift. We're going to see less free money pumping up these share equity
Yeah,
prices, and that's kind of a good thing. We do need to see that kind of come down. Ultimately, I think a lot of people who aren't like people who don't own equity, got kind of screwed by this because all the money that was issued and given into the corporate sector just serves to elevate the cost of everything that of the shares of the everything that they're building, and then the people who are not invested, who got like the $1,600 stimulus money, seem to be getting blamed for like inflation when in reality,
Yeah,
like 100 times that amount
it's
was used to buy back shares.
exactly.
Yeah.
So that's where most of the money was spent on. It's not like your
Yeah.
$1,000 or $1,400 checks that you
Yeah.
know
Yeah,
what I mean.
exactly. And
Like it's a good, they just good way, easy for them to like blame it on
yeah.
us trying to survive
And
basically.
yeah, and I think a nice kind of like thing to point to now that kind of
Yeah.
illustrates that is the current banking situation in the United States.
Yeah. So like, it, why is that in trouble right now? We're seeing like a lot of banks failing, and we did also like share this on Discord, which I'm gonna pull
Mhm.
up and
Nice.
call it. They were failing, and we
Yep.
guessed that like Western Alliance might be next, MCB might be after that.
Yeah.
That's also our guess, but what do you know? Like,
I think on
basically
Friday that was
Western.
proven correctly. The WAL
Yeah,
that
it's
tanked.
here you go. We
Yep,
we
Friday.
we guessed, and that went under, and and why is that, right? Like what?
It's
Uh, like why are they in trouble? Why are they in trouble?
overwhelmingly what I'm seeing in these bank cases where the Federal Reserve is stepping in is it's. I mean, there's a lot of narratives that get thrown around, but ultimately it's just bad banking practice. What a lot
Yeah.
of these banks were doing was taking customer funds or funds that they need to have available for their debtors, like people who deposit, and want to withdraw their money at some point. They
Yeah.
took that money, and back when the Federal Reserve interest rate was like 3.2, 3, 4% or whatever for a 10-year bond, you would
Hmm.
get these banks taking customer money, locking it into these 10-year bonds for like this 4% yield, and then putting the money effectively off the table for 10 years, because why would you need liquid money? You're only a bank. It's like, but so they're
But they didn't.
basically
It's just
gambling
bad
gambling
risk
with people's money.
management.
It's really, really poor risk management, especially considering that there's much shorter term instruments to produce yield. And the difference between the yield, like for example, those bonds that are 10 years to mature and we're
Hmm.
producing, let's say, like 3%. There is, 6-month treasury notes you could purchase as well that maybe would produce like 2% instead of 3. So the
Right.
reality is that, it's not like there wasn't options for these banks. It's that these banks chose to,
Basically, be
bet
greedy.
everybody's money for that additional 1%. And then when the time came for people to withdraw their funds, they didn't have it because it's still locked in immature investments. And at the
Wow.
same time, the interest rate has been climbing. So those short-term treasury notes were actually producing higher interest than the 10-year bonds that these banks owned. So now
And
that
that's what they mean by like the inverted curve,
that's what
right?
the inverted yield curve is, yeah. So what that means is that the yield that you get for buying a short-term bond is now higher than the yield that you would get for buying a long-term bond, which is very uncharacteristic of bond trading. And
Right.
so what that means though is that if you're a bank, you already own these long-term bonds,
Hmm.
and now your clients want their money back. So you can sell the bond to somebody else who's willing to hold it until maturity. Before
Right.
you can't liquidate a bond. It's locked up for 10
Right.
years. But you can't. There is a secondary market, but
It's
on
like
that secondary
block staking.
market, yeah, exactly, yeah. But on that secondary market now, you have these much shorter term bonds producing a higher yield. Who the hell is going to buy a 10-year bond,
Right.
at cost if you could just create a 6-month T-note and make more yield? So what
So,
ended up happening is that, all the money that they had put into these treasury bonds, the
mhm.
value of those bonds on the spot market where you can sell them, and make them liquid
Mhm.
dropped like 20%.
No,
So then
yeah,
all of the, but
and
effectively
that's
all the
that's
banks
huge
lost all
in
their
the
money. Yeah.
bond market when where things aren't volatile.
Yeah.
So
And so the Federal Reserve can step in, and for the average user of these banks, they won't even notice. So
right,
if
right,
you
right.
have your funds at a bank and you are seeing all this news about, small
So
banks
it's all
failing,
FDIC insured.
you're fine
You
unless
should
you
be fine.
have over $250,000 in a single account. It's unlikely that you'll even notice that your bank failed. if it does
because
fail.
it's probably going to get bought out
It,
by
it'll
JP Morgan
it'll be
at
bought
the end
out
of
by
the day.
someone else is going to buy it, and the
JP Morgan
operations.
is going to own everything.
Yeah, and the day-to-day operations to the end user who is just banking at that institution, they won't even notice. Like the bank name,
Right.
even though the bank went out of business, the name might not even change.
Right.
It'll just become operated by one of the bigger banks out there, and the Federal Reserve, like the FDIC, is going to step in and make sure that the day-to-day operations are uninterrupted. So as far
Hmm.
as like individuals out there who do bank with smaller banks, I don't think that there's a risk that you should be panicking or doing a run on your cash, but
Yeah.
it's good to be aware of the situation because the real takeaway here is that short-term interest is really high. You
Right.
can, as an individual, you can open a money market account right now and make like 4, 5, sometimes even 6% interest on your cash at an FDIC insured bank
Hmm.
without a maturity term. So you could do that, for 3 days and then withdraw the money again.
And I think
It's awesome.
that didn't also help with the situation of these smaller banks because they saw a run on their money, right?
Hmm.
Like people
People
basically,
get nervous. It makes
yeah,
sense. Yeah.
and then like pulling out their money and like putting into like money market accounts.
Yeah.
So
And
they
that
basically
activity
they
also
weren't liquid.
that
Yeah.
activity also drives down the price of equity. So we should
Mm,
see stock values and crypto market and
I
stuff
see.
fall because people want to get cash because cash can
Hmm.
produce high yields and is very, very secure as far
Yeah,
as
right. There's no
yeah,
risk to it,
yeah,
basically.
it's FDIC insured. You can stick like I said, $250,000 will, very, very low risk. And if you can do something with that little risk, that little vesting, and that high of a yield,
Hmm.
would you rather hold a share of, like Amazon, or would you rather hold just the cash equivalent to that and guarantee yourself, 4% in the next 12 months?
Right.
Yeah.
You would rather, if you're getting similar
Yeah.
yields, you would rather have it as cash
Yeah, and it's
because
guaranteed. So
that's
that's
no
that's
risk.
that's kind
Yeah.
of like what was helping me feel very bearish as far as like the close of the week until that damn Apple report came in.
Right.
It really
And so like in
changed
terms
the
of
game.
next week, like also sometimes I
Yeah,
like
let's
to
let's
look at
poke
the
at the deal.
dollar,
Yeah,
the DXY, that's the US dollar.
yeah.
And it is at support, kind of like, that's not a great weekly close.
No, and what
But
you should say also is that the dollar tends to trade inversely with equities. So
yep.
if this market's falling, then we should see stocks and equities increasing.
So you can kind of like
And yeah,
actually see it right here and here.
yeah,
It's kind
exactly.
of
Yeah,
inverted. This
yeah,
goes down,
exactly.
this goes up. You know, it's
This
not exact, but like, yeah,
it's
more or
pretty.
less it follows.
The
And
DXY's got some
also,
clean signals there from the trading buddy too. I like that.
oh yeah,
It's
yeah,
very clean.
check this out. So if you're trading forex, this would be so helpful. Like, check it out. Bear bull,
Yeah.
very clean.
So when you trade
Uh,
forex based on the DXY, you would trade long or short foreign currencies.
let's see the bull and bear. Yeah, 25, 26%. Basically
Jesus.
bottom to top
Also,
on four. That would be
forex trades do like 1,000 times
yeah,
leverage too. So you can
exactly. You can go crazy with it. So in
yeah,
terms of this also makes things unclear because
yeah,
the spies looking to break out. We got a bull print. We got the band
yeah,
showing green, but then the starch looks a little topped out, and this is inverse. The starch can like bounce
mm,
back up, and we are at support. So this could sort of be a bear trap if it does like
yeah,
bounce. And then so this if the DXY bounces, basically you're going to see equities and crypto basically drop.
yeah,
Like let's look at crypto here, Bitcoin. So these are kind of the weekly supports marked out. Um,
also starting to look bullish, but
yeah, but then like the starch is like
yeah,
rolled over. So Bitcoin tends to follow equities, like they kind of move together. You can see like when basically the spy when it does a run up like Bitcoin, and Bitcoin is like the rest of crypto basically
Yeah.
follows Bitcoin.
Yeah, Bitcoin is a
So
good
that's
kind
why
of
we look
like
at
it's like the true north of the crypto market, I would say.
right,
Yeah.
right. So like so this could be a potential top, and if it like we did share in our earlier TA post, so if this tops out here, then you're gonna see BTC try to like find support here where the
Mm.
strength band is, where actually like support also lines up,
Yeah.
and then it could lose this, and then we're gonna see it either revisit uh, full lows or just kind of bounce here, making a higher low.
Yeah, if it
And
does make the higher low, then that's another good indication that it might be time to stock up on some Bitcoins again.
yeah, because like I think I'm gonna get rid of the lines just to make things clear. If you look at 2009, and this is what we also shared in the TA post,
Yeah.
we did sort of have an echo bubble pump, a pre-halving pump, call it what you will. But basically, it did kind of find support, and it retested weekly resistance here,
Yeah.
only to get rejected. And this was a COVID crash, if you guys were around
Hmm.
and you remember that. But even during the COVID crash, it basically uh, dipped all the way to support the previous lows, but it did wick and bounce on it to make a higher low.
Yeah.
And then you
Then we
got
got the
another bull print, which actually started the bear market.
the bull
You can
market.
see how clean the trading buddy has been too. And so
Yeah.
I wouldn't be surprised if we get something similar where we see this dip,
Yep.
uh, maybe bounce around $17,000, like around there. If it loses it, then of course, then we're making a new low. But it could be that we bounce here and then kind of range for a little bit, and then get in,
Yeah.
then form the base for the next bull market,
Yeah.
which I think, so it cycles, it follows a pattern where usually it starts right after the Bitcoin halving or having,
Yeah.
however you say it,
I think
halvings,
I
right?
think either one, right?
Yeah, it's like
Halving.
halving, or but it's spelled HAV,
Yeah.
so I
Just
don't.
for context, what that is
Yeah.
the way that Bitcoin is distributed is based on an emissions schedule. The emissions schedule issues new Bitcoins into circulations every 10 minutes, and the
Mhm.
amount of new Bitcoins that are issued into circulation every 10 minutes is reduced by 50% every 3 years. So there is an event coming up in next year where the emissions of Bitcoins that are entering the circulating supply market will drop by 50%. And generally speaking, those events tend to be the catalyst for bull markets in the Bitcoin cycle. So, in case you're
And
unaware of what this halving is, that's what we're talking about.
yeah, that's good context, and I think so. It's scheduled based off the hash rate, right?
Yeah.
Like I think it's scheduled to, or it could happen around April next
Yeah,
year.
so the timing for it is based on the block height. So the specific, like there's a specific block at the Bitcoin blockchain. When this block gets added, the next block will receive a half the block reward. And because Bitcoin blocks are, you know, mathematically averaging every 10 minutes, but there's obviously discrepancy. Sometimes it's faster, sometimes it's slower. It's hard to pinpoint the exact moment when that halving will happen, but we can probably get it within the week. It's definitely
Right.
happening next year. I think around
So
around April, I believe.
I mean, so yeah, so with like Bitcoin, if we do see prices drop, and then if it holds around here, and then it starts forming a base, just like
We'll be
we did
yelling. We'll be
in
yelling at you to buy if that's
yeah,
happening.
at least like we'll be scaling
we'll
in,
we'll be
and
buying for
probably
sure.
and then probably like go all in when we see a bull signal with a
Yeah.
green band. And of course, that we also see that like equities have bottomed. That's
Yes.
very important, just because that uh, this is a unique market where we are still in a bear market, and
Yeah.
until equities bottom, uh, it's good to be cautious
Yeah,
with
because no
crypto.
matter no matter how excited we all are about cryptos, or how maybe not excited or whatever, it isn't a separate market from equities. Like, it maybe is like a delta or something of that. But
Exactly.
if the SPY is going down, cryptos are going to go down.
Hmm.
It's just it's part of that. It's an equity market, so it's part of the general equities I would consider. So as like a quick kind of like recap for what we're looking at this week. Last week we were kind of like expecting still a little bit bullish. This week we got some bullish indication on the front of the week, but then right at the end of the week we got blindsided by very positive earnings from Apple, which
Or bearish.
uh,
We were
yes,
bearish to
we were.
start with.
Damn it, I'm fumbling up those words. But yeah, we were bearish, very much bearish, and very in line with what we were expecting to see. And then, of course, that bull flip, and right at the end of the week after the Apple earnings on Friday,
Right here.
we're definitely also, inflation is still climbing. I think it's worth saying this because a lot of the narrative I see about inflation in the mainstream kind of like media outlets that I follow kind of phrase it in a way that sounds like inflation is dropping, but
Right.
the reality is the rate at which inflation is increasing is dropping. Inflation
Right.
is still increasing.
So it's
So
not like it's disappeared
we're
and
not
we're like
yeah,
back to
we're
2% where
slowing
we're like
down. Yeah.
exactly.
So I also have seen kind of like people who are like, "Oh, if inflation is dropping, based on all the news I'm reading, why is eggs and milk still so expensive?" And I would say as like an analogy to that would be like, um, if you're driving down the freeway really quickly and then you slow down, why are you not moving backwards? Well,
Right.
because you're still moving forward, just less quickly. And that's what's
Right,
happening
right.
with inflation. So don't expect stuff to start getting cheaper because inflation is slowing down. Just expect stuff to get more expensive slower. Yeah. So it's still not a great situation, and obviously we're going to need to see the Federal Reserve kind of step in and continue with their rate adjustments.
Mm,
And with the banking situation being kind of what it
mm,
is, banks being more and more frail, there
yeah.
are also quite a few analysts who are expecting that the Federal Reserve or the Federal Reserve will ease off on these rate increases. Personally, I don't think that's a good idea. I don't think that's the way that it should progress forward. The Federal Reserve has very unambiguously stated that their plan is to increase increase interest until inflation is decreased back to 2%.
Mm,
We're far from 2% at the moment. It doesn't make any sense for me or to me for them to stop, but I do understand why some analysts believe that, based on the kind of scary outlook in the banking industry, where a lot of banks are fumbling and failing. A lot of that has to do with, honestly, like shit bank practice, poor oversight,
yeah.
poor regulation.
And
I'm also seeing quite a few narratives where, like, oh, some of these banks failed because of their exposure to new markets or crypto. That's nonsense.
yeah,
There is no
that's
bank out there that has crypto as part of their balance sheet in a significant enough portion that it would possibly cause this type of calamity. So that's just nonsense in my opinion. But of course, I'm not the guy with the smoking gun who has all of the entire picture. I'm just trying to like piece it together. But
right.
I think what we're seeing is uncertainty right now. And the
Mm,
takeaway from this week is we need to be paying attention because we're coming up here on some pretty big moments where it's either
mm.
going to, lose the support, continue the downtrend, and give us a clear direction down,
Yeah.
or we're going to
If it
start,
gets rejected here,
yeah,
then like you could see the spike like go back down to like the band, and then we lose that, and then
yeah, and then we'll be able
we
to
go
maybe
up.
make some short profits in the short term. But
Yeah.
we're also at a spot where that could not be the case, where we could be now flipping that very important resistance level into a support, and then continuing a move up. Which, if that happens, it's short sell time is over. So
Yeah, it could be the bottom of the market, or it could just we could also get like a retest all the
yeah,
way up to here
before
and
moving all
fail
the way
to
back
like
down. Yeah.
you know make a new high. Like I think if we see like it's happened before.
Yeah, look at
Like,
that.
look at that. Like we can see, like, you know, do like run ups like this where it's like it can be a fake out,
Yeah.
or like we here in 2008. you know
Yeah.
we see that, and then we like go back down. I don't know, we'll have to see whether it's like it's actually a bottom,
Yeah.
or it could just be like a retest of this like weekly resistance
Nice.
somewhere.
Yeah, but I think that's kind of like this week. That's kind of like our takeaway. I think.
Yeah,
Let's keep an eye on this. We'll definitely be posting more about this stuff in Discord. We'll definitely. The plan is we're gonna do like maybe a weekly, maybe sometimes if it's a slow week, maybe not every week, but
yeah,
we want to do a check-in like this at least much more consistently so that we can not only give a projection of what we're expecting, but also revisit what we've projected in the previous videos and take a look at how those have played out. And I think that's going to, be a lot more benefit for people who are trying to kind of understand how to read these things in real time, because it's really difficult to do all this from a single snapshot at one moment in time, because these markets are a living thing that move through time. And so doing this, I think, on a weekly basis is going to help us really kind of like establish the trends in a way that maybe are easier to understand and follow. That's the goal. But yeah, we'll see you guys for the next one. Then it will be next week, hopefully. I think almost certainly next week, because this is turning out, or it's gearing up to be an eventful week. This is an important resistance levels. We'll definitely want to check in and see what we've progressed by this time next week. But
and yeah, and don't forget to check out our channels, our social media, and also our website.
yeah,
Website is maxi.io.
yeah.
You can see what we're all about.